This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. The big northern hemisphere countries are starting to report their August activity levels, and most of them are fine. But first in China, their official August PMIs were released over the weekend. Their factory PMI fell a bit further into a minor contraction. New orders, foreign sales and buying levels all dropped for a fourth consecutive month. Their employment weakness also persisted in this sector. However, the Chinese service sector lifted to maintain a minor expansion, but it is still far below the February to May levels. In that broader perspective, the August lift seems within the margin of error. The private Caixin versions of these PMIs should be released later today. Unofficial data of housing sales volumes and values in China aren't encouraging in August. More developers are being ordered to liquidate, unaided by any return of demand for housing. The top 100 developers faced a 10% retreat in sales in August from July, down more than a quarter from August 2023. But South Korean exports were more than 11% higher in August than a year ago, but that undershot the expected 13% rise, and they rose almost 14% in July. The growth of exports to China lagged the overall gains, but those to the EU and the USA outperformed. But China remains their top export destination. And Japanese industrial production expanded in July, a good recovery from the June dip, but Japanese retail sales rose at a slightly slower rate than expected. In the US, they are ending their summer with a major national 3-day weekend holiday, Labor Day. Their markets return in full on Wednesday, New Zealand time. But before this weekend started, another piece in the policy jigsaw was put in place for the US Fed, the PCE inflation level, and that came in low and little changed, confirming the conditions for a September rate cut. The July core PCE price index rose just 0.2% from the previous month, and the market expected change. The 0.2% monthly increase in headline PCE prices was also in line with expectations. That puts it 2.6% up on a year ago. Nothing disturbed market expectations here, although it probably means the chance of a 50 basis point Fed cut is now off the table. Perhaps helping, there was a slight improvement in the Chicago PMI from the American industrial heartland, although this is more of a contracting less situation than an expansion. New order levels edged up, however. And Canada said its economy grew at a good 2.1% rate in the second quarter of 2024, and that was better than what was expected by analysts. Higher wages and savings helped, which drove more government spending. India also released its second quarter 2024 GDP, and that rise was in a different league, up 6.7% from a year ago. However, analysts had expected a 6.9% rise, so that result was tinged with a slight disappointment. And the annual inflation rate in the Eurozone fell to 2.2% in August from 2.6% in the prior month, matching market expectations to result in the smallest rise in consumer prices since July 2021. Much lower energy costs allowed the moderation. Australian retail sales were a disappointment in July, with no rise from June and up 2.3% from the same month a year ago, well short of inflation's impact. It is worse on a per capita basis. And given the elevated inflation level, they face the real prospect of an interest rate hike. Financial markets, however, are not pricing in a hike. For the rest of the week, there will be a full dairy auction on Wednesday morning, and a slew of PMIs from all major economies are due this week. Australia will release its second quarter 2024 GDP, and Canada will have a rate decision, where a 25 basis point cut is expected. And this week will end with the US non-farm payrolls report, which is expected to show a solid 163,000 jobs gain. If it does, that will bolster the expected Fed normalisation move the following week and a rate cut by them then. The US Treasury 10-year yield is now just on 3.91%, and unchanged from Saturday, but up 11 basis points for the week. And the price of gold will start today up $2 from Saturday at $2,503 an ounce. And oil prices had little change from Saturday, still just under $73.50 a barrel in the US, while the international Brent price is still just under $77 a barrel. Despite all the obvious tensions in the usual places, actual global supply is more than enough to keep prices low now. And the Kiwi dollar starts today up 10 basis points from Saturday at 62.5 US cents. That's up a full cent for a week and up 3 cents from the start of August. Against the Aussie, we're firm at 92.4 Australian cents. Against the euro, we're up 10 basis points at 56.6 euro cents. That all means our trade-weighted index starts today at 70.5 and up 10 basis points from Saturday, up 100 basis points in a week and up 200 basis points since the start of August. And the Bitcoin price starts today at $57,989 and down 1.2% from Saturday. Volatility over the past 24 hours has been modest, at just on plus or minus 1.5%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.